Hello everyone, welcome to Elliott Wave Forex.com YouTube channel. Today is February 28 and the chart of the day for today is Canadian dollar yen. Here is the 1 hour time frame. We can see we have a bullish sequence stem, right side green up, meaning all what we like, the direction we prefer is to the upside. Okay, and right here we got this pair ending with 2 here, and then now doing it with 1 at 111.8, and now looking for with to pull back into this area, which is a double zigzag WXY structure here. So we got ABC, the first zigzag, and then we have what we call the connector. So this ABC ending W, and this is the X, and then now we're gonna be looking for another 3 years down into this potential support zone, which is based on the WXY extension here, right? And so here we're looking for support between 110.6 and 111, and from here we expect either going to new high from here, or we can see at least a 3 waves rally at least from here. Okay, so zooming out on the 4 hour. Now I don't pay too much of the attention to the exact count in the 4 hour, because I think there are a couple of different possibilities there, but I want to draw your attention to this trend line instead. And this is what we call the bullish channel, right? So as long as we stay above here, now we can say that this cycle that started from this low still remains in play. So this all belongs to the same cycle. We have not corrected this cycle since December last year, right? Because they all trade within this bullish cycle, bullish channel. So what that means is this cycle remains in play since last year, and it has not ended, it has not corrected. Now the moment it breaks below and goes below, that's the moment that the cycle completes, and then we can maybe start to do a bigger pullback, which is going to be correcting this rally from December last year, which is about 3 months old, right? So that trend line therefore is really important. Now you notice here in the blue box in the 1 hour, still is going to fall above the trend line, right? Like for example, it will touch the trend line exact around 110.93 approximately, 110.90 or so. And if you look at the 1 hour, 110.90, it still falls inside this blue box. So far so good. So we can assume now that we can still hold above the trend line, and this is the next support zone for the next leg up. Now I think the other thing that I want to draw your attention to is the idea of the structure of the pullback. Right? If you look at the structure of the pullback, it does look, especially in the first leg here, it does look like a 3 waves down. Now if it is, then that means this is a corrective pullback, right? Now if this is an impulsive pullback, it would have not shown a 3-wave subdivision. It would have shown 5 waves down and then rally. And then if you have a 5 waves down in the first leg, you always have a chance that this is becoming wave 3, which is another 5 waves down, which can extend to 1.61 or below. But because the first leg looks like 3 waves, right? So that will increase the odds, and it's all about probability, right? Increase the odds that this leg down is not a wave 3, right? Is not a wave 3, and therefore it increases the chance it will not go below the 161.8% extension. So now what about the alternate, in which the only way I can see this becomes a wave 3, right? Again, it's not ideal, is I will assign it less probability, but the only way I can see this becomes wave 3 is if I do it this way. I call it this wave 1, and I call this an expanded flat like this. Now let me tell you why I don't like this count, right? Anything is possible in trading. It's all about probability, guys, and I hope everybody understand that concept. Now this is the only way I can see that this extends all the way down and even break below 1.61. It becomes 1, 2, 3, 4, 5. Now this itself is a 3 waves otherwise, right? But if I do some tricks like this, then suddenly it becomes 1-2 with E expanded flat in the middle. Now why I don't like this? It's because simple. Because if you look at the RSI over here, I don't see any divergence versus this one. Now if it is a flat, typically you want to see a divergence between the B and the beginning of A. Now I don't see it here, therefore I would say it is less likely. I wouldn't say 100% not. There's nothing 100% in trading, right? I would say less likely that this is a flat like this, and therefore if it is not a flat, then it will be a simple 3 waves down, right? A 3 waves down, because the principle is that in a completed 3 waves you don't see a divergence, but in a wave 5 or in a flat you can see a divergence, right? So this is going to be the primary count in which we say the first leg is a 3 waves, and therefore most likely you're going to be able to find some support here around 110.9 all the way to 110.6 for the next leg higher to new high, or at the least we can rally in 3 waves at the least from here. Okay, so that's the idea here, and for further updates you can feel free to check our service. We have 14 days trial. The link is in the description of the video. So see you all again next time, and have a nice day everyone.